Hey guys, I want to share with you a dividend stock that I just bought for the first time ever. So I've never previously owned this dividend stock, and also they pay a 6% dividend yield, and they're the number one market share for the industry that they're in. So there's a lot of impressive things about the company, but also there is risk with every investment. The stock I'm talking about is ticker symbol UWMC. We only have $254 in that position right now. Again, very small position, but since there is some risk in this position, just like with a lot of my other stocks in here, I'm not going to make it a huge position in my portfolio. Like DocuSign, I don't really want to add any more shares of DocuSign because the risk to reward doesn't look great here. But let me go ahead and share you a few things I like about UWMC. We're going to look at their investor presentation, then we're going to dig into their financials and show you why I like this from a dividend play. Their dividend literally cost them a very little amount of money, and we'll get into that a little later. So yeah, let me now share with you a few slides from their investor presentation because this company really is impressive. All right, guys, so here's UWMC's most recent investor presentation. They do United Wholesale Mortgage, as you could probably guess, but check this out. They're the number one mortgage lender, the wholesale mortgage lender, and purchaser. They have a 8.4 overall market share, which is actually the largest market share. They break down the numbers a little later. And for the wholesale, they have a 44% market share. So already, a pure play for this industry. And as interest rates go down, which I'll show you very soon, that's really going to help the company. Largest mortgage lender by volume and total originations and purchaser, which is pretty cool. And here's their liquidity. So the company has a $10.6 billion market cap, and they have $2.7 billion of cash and available liquidity. They do have a lot of debt, like $7 billion or something like that, but that's normal for this industry. And check this out. I wrote some notes here. So here is what's crazy about the company. So if you may have noticed, look at the refinance loans. It was crazy in 2020. People were, as rates were hitting zero, people were refinancing their loans and stuff like that. Well, check this out. Now that rates have peaked out in 2022, we saw the refinance loans just fall off a cliff. And I think it will go crazy as interest rates slowly go lower. So this is a part of their business that should just slowly grow. But if you look at the purchases, check this out. It's the highest, especially from 2019 before that. So there's some growth there. That's kind of my thoughts on that. And here's this. Here's their actual market share. So UWM is the largest one, 8.4%. You've probably heard of like Rocket Mortgage. They have a 5% market share. Chase, which is JP Morgan and Wells Fargo. There are some other ones on there, but here that's for the direct lenders. Here's their top wholesale lenders. So this is for Q1 of 2024, and it is pretty recent. And here's the market share, 44%, with Rocket Mortgage having a 10%. So yeah, they own this whole market apparently. So yeah, that is pretty crazy. Oh yeah, and UWM, their purchases outpaces the industry by quite a bit. So here's UWM's annual growth of their purchase volume, and check this out. We can kind of compare it to this is the industry. We can kind of see every year it just outpaces them, which is pretty cool, except I guess for 2020. But they're always outpacing the industry, keeping up their market share. They're also faster than their competitors. Their clear to close rate is only 17 days, which is basically half of what the industry is. And, that time is priceless, to a customer. Oh, yeah, and here's their innovation. We can kind of see every single year what they do, like the UWM portal, and here's the most recent year. Kind of just some innovation that they talk about doing. Yeah, and they talk about retaining the best clients, the best talent at their company, which is pretty cool. And yeah, here's their purchase volume. It's $95 billion, which is crazy. We can kind of see their revenue. 2020 was so good for them, of course, when rates were literally zero. When rates were zero, that's the perfect time. And that's why I think as interest rates are going to head lower, this is going to be such an attractive industry. And they focus on high quality loans, high credit quality, and low risk loans. I guess that's kind of the loans you want to be in. And they also have competitive pricing to their competitors by having a lower cost, which is pretty cool. But yeah, here's some more important slides. One thing, we're about to look at how much their dividend costs. So remember this number right here. Their adjusted EBITDA, $133 million, and their net income, $76 million. So let me now share with you how much the dividend actually cost them, because it barely costs them anything. All right, so here's UWMC stock. We're going to look at their financials now. Look at the market cap in the top right. They're a $10.6 billion company, and they have a dividend yield of 6.03%. So that's actually a pretty high dividend yield. Now, if you remember their net income, now this is going to look a little choppy. I get it, but it's actually normal for this industry. If we look at something like their operating income, it looks a lot better because it doesn't include, their investments in the future. But let me just remember, we can even look at their net income though. Remember, $76 million of net income they made in the most recent quarter. And guys, their dividend only cost them $9.5 million. And this is a company with billions of dollars of loans and, a huge market cap of $11 million. Their 6% dividend yield only cost $9.49 million, which for me seems really low. And if we just look at their cash on hand, they got $680 million, which can pay off easily the next year of dividends and the year after of dividends. So they have so much cash on hand that could easily pay off multiple years of dividends. So that's why I don't think this company is that much of getting their dividend cut. Now, I will say they do have a lot of debt. Like, look at their total debt, but it's also normal because they're getting billions of dollars of new assets, of new loans. But they have total debt of $9.8 billion, so nearly $10 billion of debt, which is something that you need to be aware of. But yeah, that $680 million of cash, they are diluting you, not by that much. You've been diluted 2.66% year over year. We can also look at their top line revenue, their sales growth. It's actually up nearly 11% year over year, but it's obviously down from the 2020 peak when rates were literally zero. It was the perfect time to refinance. But yeah, I do see some growth as interest rates go down. It'll just be a tailwind, and this company should just grow their sales. So that's kind of my thoughts on them. As you can see, they're investing like crazy into like new assets and stuff like that. So we don't really look at the free cash flow and the operating cash flow, because if we look at Rocket Mortgage, if we look at their biggest competitor, as we can see, actually the stock prices have performed very similarly. This one doesn't pay a dividend, but if we just look at their competitor, same for this one over here. Like, their net income is way down from 2020, which was the peak refinance. And we again, the bull case is we hope soon that'll as rates go down, that'll boost the revenue like crazy. Same with their free cash flow down here. My guess is it's completely normal for their operating cash flow to look all wonky like that. But anyway, I'm curious to hear your thoughts on this stock down below. Not Rocket Companies, which is Rocket Mortgage, but UWMC, because they have a 6% dividend yield. The dividend doesn't cost them much, and they're the number one market share leader. So that's kind of why I really like this stock. I don't know why my phone ain't loading, but yeah. So yeah, those are my thoughts on UWMC. Remember, none of this video is financial advice, not personalized advice. There probably is a lot of risk in this investment that I'm not seeing. Again, I haven't done thorough research, but that's because I also have a really small position in them, $250, just like I would have a small position like here in my Moomoo account. If you want to subscribe to my channel, I'd really appreciate it. We're so close to $10,000 in this account. And once I buy a stock in this portfolio, I'm actually never allowed to sell it for the rest of my life. So if you come back to my channel in a couple of years or something, I will still own all these same companies. I plan to hold UWMC for a long time, not forever. Maybe forever. I don't know. Maybe it'll go up so much. But I think as interest rates go down, this is a really smart bet on that industry. And you also collect the dividend yield. They pay a qualified dividend, so they're not like realty income or a BDC. They actually pay you qualified dividends. So every year when I get 6% of my money back, that's at the lowest tax bracket possible. It's either taxed to me for 0% or 10%. Very small tax I pay on the qualified dividends, which is another reason why I really like them. They are up 40% in the past year, but on the 3-month chart, they're down 16%. So hey, I picked up some shares, and each share only costs $6. So if you buy a couple of shares, it won't set you back too much money. But yeah, that was pretty much all I wanted to talk about in today's video. Don't forget to drop a like if you did enjoy, and if you have any questions for me, I'd love to answer them in the comments.